Hello guys, glad to have you on board again today. I think we are due for an update on the Cosmos ecosystem as the airdrop season. Remember all of these things we've talked about in the kind of previous version of it that was a month and a half ago or something like that. So I hope you've seen that video first because lots of the things that I've been explaining to this one will not be said again. So it is a cyclical, complex ecosystem to understand. Those who just basically scratch the surface will definitely pass through a Cosmos ecosystem, as others who understand that the true value is below the surface area, then in that perspective they will find tremendous value. But this is not an easy one to grasp. Understand that this is a living kind organism type of ecosystem, and in that perspective you need to be on the right pace. Follow what the market is doing, and how this ecosystem is orchestrating itself is key to success in Cosmos. Easy solution and easy money is not what you'll find out there. So this is the core principles that we have explained in greater detail in the first video. Not going to waste too much time going back to them. Look at the first video if you need more details. Otherwise, so as we've passed more than half of the season, and that we had the biggest airdrop of that season, which is Crescent network, and we'll talk about this one. And as we're headed into what's likely going to be the second in line, EVMOS in terms of value, okay, I thought it was important today to kind of update what we've said previously, as some few elements suggest that the pace is already changing for what's coming next. Always try to be one step ahead is what is essential in these evolving markets. Okay, so here it is. This is the ecosystem as it is. So as you can see, not that many new chains since the last time we've talked. But there is one detail that so many people have been talking about and that I had to explain multiple times in a row until I actually felt like I had to go public with this to avoid answering 10 times the same question, because I think it has been misunderstood from the community or for participants in the Cosmos ecosystem. Okay, every blockchain in this thing isn't the same. There are two types of blockchains in here, which I would summarize into two categories. The first one being the application kind of blockchains, which is multiple examples in here. Just assess that this is a blockchain that serves a purpose and a single purpose. It has its own applicative perspective type of demand. Giving an example like Bitcana or something like that, or Bitsong, Dig Chains, all of these things serve a single purpose. They are application kinds of blockchains. They are serving their own needs. Okay, and on the other hand, you will have what I would call like network kind of blockchains, which are kind of alternate layer ones living into their own bubbles, but offering services to some other applications that will, for some reasons, inherit from that network effect. Talking in here about the secret network, which is offering that big black box in which you can do lots of things within. And in that perspective, lots of services come out of this box and use it. So understand that therefore secret network is a kind of network blockchain where so many others are not. So out of the blockchains that are networking effects, you have of course Terra, you will find Akash or Akash, I don't know how you say it, Osmosis, even though most people don't yet understand how deep the implication of applications will be on top of Osmosis. We expect some to be released over Cosmos, as we talked about in the previous video. There's going to be a WASM instance, permissioned version of it, of course, on Cosmos, and there's going to be as well on Osmosis, meaning that these blockchains will allow application to go on top of them, and therefore we can expect these to turn out being kind of networks. So I'll explain bigger than that, of course, in details. Persistence is literally going to be, Yumi is going to be as well. I don't know much about Mediblock or Origin Network. I'm not sure that they're going to be parents of many child applications below them. Gravity Bridge might be one, or not necessarily. I mean, this is another specific case. Considering it as a third layer, okay, bridges, and I tend to see like Axelar, Gravity Bridge and Nomic, which is still not yet fully released and not IBC connected, but it's already airdropped to Atom holders and others. So considering it that way, in that perspective, there are three categories, okay? The application blockchain, in which they or an application is released in their single self-governed entity, which have their own validated set and so on. So, but these are application blockchains, okay? They serve their own needs, and they are very less likely probabilities to see other applications coming below them, okay? Kind of smart contracts interacting with it, but no more than that. And they will interact with other application, either within the Cosmos ecosystem or elsewhere if they use bridging technologies. But despite that, what matters to me and where I think there is the most value to gather in the Cosmos ecosystem is not on these generic blockchains. These can hide some value, sure thing, but those who have far better risk limitation in an investment perspective are the network layers, okay? Those will have application right below them, okay? Like, for example, these are the ones we've talked about. There are many others, but these will have application coming on top of them. Sub-tokens being deployed under these networks. Like, for example, Secret Networks, who has airdropped Shade, and there are so many others, application that will come from the services offered by Secret Network. You've got the same thing for Persistence, Yumi, Akash, Terra, Osmo, Cosmos. I expect lots of others to come. The big one in terms of network effects for this cycle was Juno, who has lots of application released. We'll also see that lots of these applications were absolutely bullshit kind of projects that have pretty much no intrinsic value. But still, we've seen that there was demand for WASM kind of contracts to be executed on the Juno blockchain and releasing their own tokens. So even though the first kind of cycle for Juno was full of shit, and we'll see a few examples, that doesn't mean everything was, and that certainly doesn't mean that everything in the future will be as well. So I think there are going to be future cycles for Juno, hopefully for the best, and hopefully for better quality than the first ones. So we'll talk about these cycles and generations as well in their sub-network environment. I think Checked is going to be a network as well. E-money is going to be a big one if it ends up being used, because of course there's huge competition with Terra in the way that they provide their services, and Terra has far more advanced ecosystem than there is for e-money, but still could be a challenger at some point. I don't know much about all of the others, so I'm rather going to remain silent rather than saying some bullshit. Loom Network is probably going to be offering some sub-tokens interest, but it's still very limited at that point in terms of development, so probably in the future, but not necessarily immediately. Okay, so understand it that way. There are some applications already, like for example, Keychain is serving its own purposes. I think they're less likely going to be application building on top of it. I think Bostrom was as well, Desmos, the Center XO, Iris Network are all very likely going to be application layer kind of blockchains. Sorry about that. All right, sorry about that. Okay, so I pay a lot more attention to these for one specific reasons, and you really want to have to separate the two. This one can hide some value, but in terms of risk limitation, these ones have far better interest to me, because these have the probability to have sub-application specifics that will very likely going to airdrop to those who are participating in the overall network. So understand it that way. Cosmos is a network of networks and application-specific blockchains that will serve their own purpose, and also in that perspective will very less likely have network effects below them. So these ones have the more value, but also have the more potential to have underlying value being airdropped to you. And this is where the risk limitation comes into my personal situation, because what matters a lot to me is to understand that as I want to risk manage the probability of my strategies to fail, because that's what we do as a risk manager, we just don't see the reward part of the equation, we also have to measure the risks. And there are always significant risks wherever you are exposing your capital into crypto, because these are fairly competitive and innovative and very rapidly innovative system. So there's always a lot of risks, and I am mostly limiting my risk in the Cosmos ecosystem due to these airdrops. I've explained that in the first video, but not in enough details because people didn't really understand that. So in order to get exposure to sub-networks inside the Cosmos ecosystem, talking about the secrets, the Cosmos, and things like that. So there are the first generation airdrops which we've talked about, which means that if you were holding the core coins back then, you've been dropped these network tokens. Okay, the Osmos, the Junos, and things like that. So that was the best case scenario. You basically nothing to invest because you've just been receiving the networks themselves as they drop their tokens to you as a token, as an atom holder. And as we've seen, that was the first generation of airdrop. The second generation of airdrop has been built within these networks as some other networks created themselves along the way. So you have to understand these mechanics and these cycles, okay? The networks have been maturing. Some of them already created their network effects. Juno, so in terms of cycle, Juno is definitely the far most advanced in terms of network effect. It already probably have experienced its first cycle of sublayer application creation. And of course, as we've seen through this cycle, the early tokens in the cycle are the one that seems to be distributing the most value. Those who have received the NETA upgrade, the NETA token, and the RO token is expected to be released sooner rather than later now. I think a release date has been shared, so we'll see about that. But these tokens are expected to be the one grasping the more value into the Juno ecosystem. And what's great is that if you have been receiving these application airdrops on top of the Juno network, then in that perspective, you probably have reimbursed your initial investment on Juno, meaning that these airdrops basically pay for the initial investment. So you're left with either the choice to double your exposition into the ecosystem, which is what I mostly do personally, meaning that I'm selling the tokens to double my exposition on the network itself. And then that means that even if in the worst case scenario, these networks were to be less used because we go in a bear market or whatever, even if they lose 50% of their token value, okay, I will still be at break even, meaning that if I want to get hell out from 50% drawdown losses, I'm basically off with what I had initially invested, which is great. So that is my risk limitation. I don't know which networks are going to be efficiently working still years from now. Probably most of them won't, or they will face some severe competition over time. But what matters to me is how do I risk limit that probability? And that's the way I've done it. By sufficiently early enough exposing myself to these networks, because when they do, then in that perspective, I have the ability to kind of refund my risk by taking these airdrops. The bigger the better, of course, and this is hard to predict. We've talked about how to efficiently expose yourself to a high chance and probability to be airdropped the best possible way, and I'm going to say it over and over again. Find the networks, identify their maturity in the cycle, which is what we're going to be talking about today in greater detail, and most importantly, interact with the system. If you do not play with it, if you do not use, you very likely will be less rewarded. And we've seen that in the first generation. We see that even more into this one. No interaction means far lesser airdrops. So take some time to interact. We've talked about Crescent network, and this is the biggest example we could take. If you have interacted some way with the GravityDEX prior to this redeployment on itself, on its own blockchain, then if you know what the GravityDEX was, it was the front end, it was front end by Amaris. And if you've been using Amaris and just basically swapping from these things, and if you've been LPing and voting on Cosmos proposals, you had a 2x multiplier for each of them, meaning that's 2x times 2x, okay, which makes 4 times, okay, and then you get another 2x on top of the 4, which means 8 times the airdrops you would have got without those multipliers. So this is really, really something big. If you've done the whole thing, that was an 8 fucking time the airdrop. So when I say interacting with the networks is crucial, that is one big example. Okay, of course that still means that the airdrop itself was significant enough, but if you did interact, you've made it tremendously bigger than that. Okay, so one very big example. It is not a general thing. That means some airdrops do not necessarily require interaction. Some other airdrops will require you to answer like quizzes or some things like that. But as the market matures, and we've seen that previously, there will be more interactions required to get the money. You simply won't get it by doing nothing. Okay? So investigate, select the ones you think hide value and interact with them so you can anticipate potential rewards. But on top of this, which is where people really didn't get it, because I haven't gone into that many details in the previous video, and we will do on this one, there is a cycle of maturity within those networks, okay? So I'll separate this into 3 phases. Okay, the first phase is the one I generally call the inflationary phase, meaning that there is a shit load of inflation in the token, meaning that if you do not stake the tokens, you are going to get rapidly diluted. Okay, so in these things, if you just get airdropped and do not stake the tokens, the high level of inflation means that if you are in and out for some quick bucks of speculative gains or losses, the pumps and dumps and things like that, this makes really no sense. And specifically on the coins like Crescent and EVMOS, who are entirely airdropped for the Genesis supply, meaning that the whole tokens circulating at Genesis are held by those who've been airdropped. So they have a simple choice. Are they either buying or selling, speculating, or just staking the tokens, putting them out of circulation and therefore increasing the volatility? So generally, Cosmos projects, well, released that way, will have a lot of volatility on day one, and then prices will stabilize as offer and demand should find common grounds to bootstrap the liquidity. And in that perspective, well, we've seen that exactly with Crescent, meaning that my initial ideas have been proven right with this one. Reason why I'm going public with this, because I expect exactly the same to go on steroids with EVMOS. So we'll talk about that, okay? So the initial token distribution is generally more or less volatile depending on the Genesis token supply. But when it is entirely airdrop, expect some wild, wild west kind of price action in the first day, and then prices stabilize, as we've seen with Crescent. Then this inflation phase generally takes a few months because, of course, it depends on whether you want to keep that token for long enough or you just want to speculate on the ups and downs. And of course, the safest option in here, if you think there is going to be a midterm to long-term value for these tokens, which is the case for Crescent and will very likely be the case for EVMOS, then in that perspective, just stake the tokens. Don't try to gamble with the volatility and just go easy with that. These are, I think, must-have tokens. So if you get them through the airdrop, then good luck for you. You didn't have to spend a dime to get them into your portfolio. If you do not receive the airdrop because you weren't eligible for it, you're gonna have to buy the token, but you have to do it smart because, as we said, buying in means it's going to be crazily volatile in the first stages. So for those who do not necessarily have the airdrop tokens, might be a wise choice to let the volatility calm down for a few days, to let prices stabilize, because it's really going to be a professional way to try anticipating value when you have absolutely no true information about the supply. Like you said, it mostly depends on what the supply of Genesis will be. And when it is fully airdrop, like what is for EVMOS and stuff like that, either you have a truly well-defined plan to actually kind of speculate on the true value of the token, and therefore you're going to try buy as low as possible. It is going to be hard to find a price, not knowing how much of the supply will be circulating at day one, because lots of the people who get airdropped will simply not sell the tokens and stake them. So this is hard to predict supply on these cases. So be real cautious, and I suggest in this perspective, wait for a few weeks or months until the inflation phase starts to slow down. It generally takes a few months for the highest stake of the inflation to actually cool down. But it doesn't come without risk taking. Understand that the longer you wait to get these tokens, the lesser the probabilities for you to be eligible for the airdrops, for the application airdrops. And this is the mechanic that I haven't talked in the previous video. Very, very important, because lots of you guys don't get the airdrops, and therefore you've been asking me that question: how the hell do we get exposed to these tokens which we don't get the airdrop? Well, this is how you do it, okay? If you go in early, staking is not an option. It's absolutely required to cover for the heavy amount of inflation that these tokens generally have for the 6 to 12 first month, okay? So if you want to go early on these tokens, and therefore you're going to be absolutely sure to be eligible for the airdrops, I think if you go on day one, of course you're going to be in the snapshots. But the thing is that don't forget to interact with the tokens. If you play on a network, you will get bigger rewards, and this, I think, mechanic will be even bigger in the future. So it's not just holding and staking the coin, which is the #1 thing to do, okay? Eventually LPing a bit, but this is very dangerous as volatility will be big. That means impermanent loss will be as big as well. So I do not incentivize you to LP on these tokens on the early month. Let it play out until the volatility cools down, and then you LP on the second stage. The first stage will be staking, because that's the safest thing to do, despite slashing, meaning that if you wisely choose your validators, normally everything should be fine. So staking is the #1 thing to do. Of course, voting governance, boy, this is just absolutely required. So many airdrops have been conditioned to the fact that you've been voting on this or that proposal. So vote on every fucking proposal. I mean, everyone you can. But generally there are 5 to 6 days or 3 to 6 days to vote on a proposal. If you cannot take a few seconds each and every 6 day, I mean, probably Cosmos is not meant for you. But otherwise, so for the inflationary period, meaning anything that is above 35% inflation on a year-to-year basis is overinflationary. So this period lasts more or less a year into general Cosmos ecosystem. Not for all of them. Some of us have specific ways. Like, for example, Czech network has very low inflation, so this inflation phase doesn't exist on Czech. And then comes the lower inflation phase. In this one, normally prices should start rising as demand will outpace the inflation on the token. The high inflation correlated with high demand should create some kind of ranges, okay? The token pumps and dumps because of too much inflation, and it creates kind of a range. When the inflation slows down, as the demand should outpace this, we should see and start to see signs of uptrends in the token at that point. So if you're buying a token that rises, you should know where you are in this cycle. You are pretty much in the phase in which inflation is lower than demand, so prices start rising. If you get that, that means the chances for you to still be into the snapshots are very limited because you've been passing away from the inflation phase. Inflation is called like early investors, and most of the valuable snapshots will target these guys, those who came in early and took the risk of inflation, token dilution, spread it out the volatility, some that have been staking to secure the network, LPing afterwards to bring liquidity, interacting with the system, using the system itself if it provides user interfaces like swaps or whatever. Try to interact the most, okay? And then this is how you maximize your chances to get the maximized rewards for the airdrops. As we've mentioned previously, those airdrops are generally, I mean, the qualitative one are announced months after the snapshots have been taken. So understand it that way. Out of day one, in which you take the highest risks because you don't know anything about the actual value, the circulating supply to kind of define a base value. This is really hard for me as well as a professional to try figuring out standard prices movements on first days of quoting because, I mean, supply is so volatile in these times. But then the inflationary phase is risky, of course, because that means if you do not stake and if you do not get proper rewards, the vesting schedules for teams and so on will literally eventually dilute your exposition to this market. So learn about the supply schedule, okay? Depending on them, and we'll eventually make a separate video entirely about that, you might want to skip on the first month to let a few of the most aggressive schedules show up so you don't take the risks of being diluted. But of course, understand that doing this reduces your risk of being diluted, but it increases the risks of you being outside of the snapshots. And that's what I would like you guys to understand, how to properly balance that. Take into account the risk of dilution by looking at the supply schedule, and the more aggressive, the higher the risk, so you might want to wait. But if you wait too long for the inflation phase to terminate, your risk of dilution will be pretty much close to zero, but your chances to be before or to be after the snapshots, the valuable snapshots, will be significant. So you need to find some kind of a middle ground in which you need to wait for prices to stabilize so you can bring a bit of value to the token and you can try to buy cheap. Once again, don't buy when the hype is there. Buy when no one gives a fuck about the token, when the prices are low, and don't try to catch the bottom. Just try to have a good price. It's not bigger than that. Stake the fucking tokens, interact with the blockchain, and let it play out. When the hype comes in, generally comes with prices rising, meaning that inflation has tamed enough for demand to outpace it. So if you buy the tokens when they rise, it generally means you will not be eligible for the right airdrops. So understand it that way. Depending on your risk profile, waiting to get the token to rise might sound like the safest option. If you want to use the risk limitation that I personally use, meaning that I'm not looking at the best possible price, but I'm looking at the best possible timing to buy the tokens that I do not get. And of course, when I can get them airdropped, that's just the best possible solution. I don't have to buy the fucking token on day one. I just select how much of it I want to hold, and I stake the rest. And then I interact and so on. So like I always said, the sooner you came to the ecosystem, the easier it will be for you because the tokens, the network tokens, will be given to you. If you came late to this thing, you're gonna have to be smart, meaning that those tokens that I got airdropped, for example, you're gonna have to buy them, but you're gonna have to be real smart with the way you do it. And that's what I wanted to explain into today's video. This mechanic I just uncovered is absolutely crucial for you to understand. How you're going to have to balance the risk of high inflation and very limited probability to find actual value on the token because price may move too quickly. Waiting for a few weeks and months might be smart. Don't try to buy on day one unless you are really ready for a wild ride, okay? But if you do it, then understand that if you buy early, you can still cover the risk with staking. The only drawdown in here is if you really buy a token that lose a lot more because of high token dilution. But like I said, this balancing that risk requires a lot more expertise than most of you guys have. It really requires experience into trading to manipulate price projection in dynamic supply, which is not going to be an easy task, okay? So out of this, I would suggest you've had two choices. With limited skills on trying to figure out prices on dynamic supply, which is the case for most of you guys, well, choice number one is to buy. Try to buy as low as possible, okay? So don't hype when the token pumps on day one, at the first minute. Don't try to be there when the token launches, okay? Let it pass for a couple of days. Try to see how high, low it got, and try to buy on retracement, okay? Make sure that, as usual, you kind of build some kind of a Fibonacci retracement, okay? You see how high the price have gone on day 1 to day 5, how low it got, and try to buy some kind of at least 50% retracement, at best 61% retracement on top to low prices, okay? If you want to see the prices, I recommend you to look at cosmospack.com, which is giving you some charts for tokens that get listed. So for example, Crescent, if you want to have historical prices of Crescent, you can use this one, okay? So as for example, if you were there on day one, you would have seen that the highest prices we've gone to were 2.30 or 60 cents, and the lowest prices we've gone down to was 0.75. Okay, so that was basically it on day one. These prices weren't there, okay? So this is the price that we have scrolled across on the early minutes and hours of trading on the day of release. Afterwards, prices stabilized as liquidity increased, and you would easily have known that the definable prices to buy were at least below 1.30. So any price below 1.30 was a good buy. Okay, so do it that way. That's one way to do it, the simplest way to do it. Let the couple of days pass for the early stupid price action with very low liquidity to pass. Try to figure out how high it gone and how low it went, and in that perspective, take a retracement out of it. Never buy in the top 50%. Always wait. You rather like to pass on a token that surges rather than trying to be in at absolutely no reasonable price limitations. okay? So try to be smart with that if you want to buy early a token. Don't try to buy as low as possible. We're not there to be the best traders. Understand that most of your risk management, if you buy early, is going to be handled by the mechanic we just talked about. You want to compensate the potential risk of losses by being airdropped for sure. Okay, if you find a good project which has a network effect, there is going to be application building on top of it, and you will be airdropped. As you buy on day one, you will be 100% sure to be on the snapshots, but still interact with the thing. Okay, if you want to wait, which of course severely decrease the risk of dilution due to aggressive supply schedule and high inflation targets, then in that perspective, wait, but don't wait too long. If you wait until prices are not suppressed by dilution, meaning that demand outpaces supply, that means that most of the time the snapshots, the valuable snapshots, have already been taken. Okay? So it is how it is. Now you know everything about the mechanic that I've been covering on these airdrop things, how to properly try to benefit from them as a risk limitation for potential drawdowns on prices. Make sure you stake the fucking thing to get not diluted too much. You're still going to be diluted by the vesting schedules and the teams and foundation things, okay? But at least in the first days, staking is not an option because it at least provides passive revenues from the tokens that sometimes generally compensate for the high inflation coming elsewhere, either the teams or and things like that. Okay, so buy early means staking is mandatory, interacting with the thing is not an option, and you'll be 100% sure to get the airdrops. And hopefully they will be big enough to compensate for everything else, meaning that if you're really lucky and if you got a good price, you're literally going to double your exposition to the tokens you've bought early, and even more depending on how big the airdrop is. Okay. And of course, understand that this is not a guaranteed stuff. Sometimes you will be buying into a thing that will not get that much value from the airdrops and things like that. And in that perspective, understand that this is what trading is all about. You're never going to know anything for sure, otherwise that would be too easy. So that's why you don't gamble everything on a single network, okay? You have to expose yourself to multiple networks. That's what we've talked about in the first video, and I hope you understood that, okay? So what I wanted to add on this one, separate those who have network effects from those who are application-specific things, okay? These will very less likely have tokens building on top of them, as the networks will for sure have, okay? So those who I think will have network effects is osmosis. Even though people don't really understand what osmosis is all about, it's very likely going to be a network because it will have cosmos and permissioned solutions on top of it, meaning that probably some people will build smart contracts to interact with osmosis LPs or services in general, and these guys will literally probably have going to airdrop governance token on top of it to help govern these smart contracts themselves. So understand that there will be network effects for osmosis. No one really understands what osmosis is, but it really is going to be massive. At least I think is. Cosmos will have the same thing with the permission Cosmos update, which is going to come 3 months from now. Okay, persistence very likely will have as well with its liquid staking things. It's probably going to attract developers to build on top of these probability of these services. Secret network definitely has, and we've seen the first layer of airdrop. So understand that the maturity as well has gone on for secret. Secret is now terminated from the inflation phase. It's probably going to start rising prices now, meaning that your only benefit from buying secret networks is no longer trying to get the airdrop. It's just trying to figure out how high the prices should be. You want to trade price increase now on secret. It's all there is left for you to gather. Okay, if you're buying secret now, you're way too late on the cycle to think of it to be airdropped, okay? But understand as well that there might be multiple cycles, okay? So in terms of maturity, the biggest maturity is Juno, okay? Juno has done an entire cycle. It's been over-inflationary, it has made the snapshot, it has made the airdrops, prices have risen, and now they are consolidating again because Juno has way too much inflation anyway. I mean, still haven't dampened inflation. But another cycle may come as inflation may be reduced on Juno someday. Okay, we might see another price increase due to a larger set of demand for the network itself by, for example, some other snapshots offered by some upgrades to Cosmos and possibilities, which will attract new projects and new developers to release on the network itself. So if there is a new set of demand, then in that perspective, Juno's price should be expected to rise as there will be more use of the network. Others that might have a network effect would be, like I said, Alcash, which will, I think, have a lot of smart contract interaction on top of their storage capacities. Terra definitely has one, but in terms of maturity, we're way off. Terra has gone all the way through a full cycle. I think now Terra's prices are overpriced, actually. Regarding this, Checked is going to be a very interesting investment because it's still early and has no inflation. So this is one of the tokens that I like, but I don't think there's that big of a network effect. But the fact that there is no inflation on Check makes it a particularly smart investment, in my opinion. Don't do any more than 1% of your Cosmos exposition on this, 2% maximum. Yumi is going to be very, very big player because this is all about lending, borrowing, and there's going to be lots of services building on top of it. We've seen that with the lenders and borrowers systems in Ethereum, have been attracting a lot of devs. So I expect this to happen as well for Cosmos-like version, specifically with the interactions we'll get with the Gravity Bridge. So these are the things, okay? I think the most interesting ones which have network effects, Osmo, Cosmos, Persistence, Secret, Yumi, Checked, Juno, maybe others that I still don't yet understand, but just giving these as an example, I think e-money as well, okay? So understand it. These network effects, Loom network is as well. Try to figure out how mature they are in the cycle to figure out how you want to trade them. If you are late in the cycle, all you have left to do is trade the price. So wait for the price to reverse and start rising. In that perspective, you will profit from the price increase. If you are early in the project and still in the inflationary phase, try to get in at least a good price. Don't try to have the best price. Stake to avoid being diluted, meaning that even if the token keeps dropping on the price, you will receive more tokens to compensate for that drawdown. And you will be eligible for the airdrops. It's not going to be guaranteed, but if you target many projects, you just can't lose everywhere. You're probably going to receive airdrops anyhow and anyway if you interacted properly with the blockchain, and that will compensate for you not necessarily being able to buy the cheapest price, okay? You will have more token in the end because you will have received block rewards and stuff like that, okay? And of course, when prices stabilize, that means you're too late for the snapshots. Most of the tokens that release with a tight snapshot schedule, meaning that they basically tell you we just took the snapshot 1 week before. These are genuinely worthless tokens, okay? The tokens that have value take longer snapshots back in the past. They require you to be there from the early days to take risks and help the projects grow. That's the mentality in Cosmos. If you come here for easy, quick gains, you will likely not be rewarded or rewarded with worthless tokens like we've seen on Juno, which some tokens have even announced the snapshots being in the future. I mean, how stupid it is to say, we're going to snapshot today. Oh, we're going to snapshot in 1 week. So come on, guys, buy some Juno. I mean, this is absolutely crazily stupid. So, of course, most of these tokens were absolutely worthless. Okay? So valuable tokens, try to find them, but most importantly, if you want to risk manage the way I do, try to find the networks, figure out how mature, and trade them appropriately. Either you're trading price increase because there's all that's left to do, and if the trend is already terminated, then wait for the next fucking cycle. Don't be dumb enough to buy after the hype. Really talking about Terra here to be precise. It was the same thing for Juno when it was about $40 fucking. God damn it, it was worthless to buy it at that price. So wait for the next cycle eventually for this one, just like you should wait for the next cycle for Terra. And the other ones, figure out their maturity, trade them accordingly. Now you know everything, guys. Bye-bye.